Oh, yeah, you just get 2 minutes forward.
Yeah, it's not really appreciated. Yeah.
Anything more clarification? So that is not class. Any opinion on that?
I think, they need to provide condition.
I mean, we provide some interest. So we were talking about director duties. We were talking about director duties. Yes, now duty provides some interest. So you will see what do you mean by conflict of interest? Right, that is drawing two minds. Drawing two minds. Let's say, you are a judge. Your father is accused of murder. The case comes up before you. What will you do? What should you do? Right? Give a sentence to your father. Hear the case. And give a sentence to your father. And be a good judge. And be a bad child. Or save your father. By letting him go and be a good child. And be a bad child. So, you are going to be the judge or be a child. Now, that's the conflict of interest. Are you going to do justice or are you going to protect your father? And to protect your father, you will not be from the judge. You will not be more than the judge. How to be right? How are you? Right? Now to remind another judge. Remind another judge. Right? He is your father and he is your father, you are not the case. So if you remind another judge, no problem. You are not and you can be part of our and help you get out of it. Right? So, you see, we can also like that. Subject of avoiding pressure, being pressure, in direct country, details of the company, or the performance of another, right? So, because of those areas that in and in some investigation, right? The thing here, I need to understand. And here we on behalf of the country. But the third party is to award the country personally and not the company. Without giving people to the company or in board, it is not to take the fact personally. Right? So, the director, you know, they want to take the company of the company. They have been designed for the company and exercising the department personally. Now, what is in this? Right? what is the and there is inside that enter into the demon in the third part further. That is not right. That is not right. Now, if you are given, are you denying so there is nothing wrong? You are not even after you denying. You have negotiation of the name of job the company. Even by you denying from people who it's still the community. Not the community. Idea of the personal private and meeting. State with community. There's no difference that the company itself does not have a failure. I people people remember that's what it is. Even after you have not duty and still continue with regard to the company matter. I think Our camps, sometimes that architecture and what is very like a demand. During that, our involved labor that we have asked, we have a state of the and we have that. Or the camp. Now, our labor so, have working more, have new technology. That is,
After this one was later, no, it's right now, yes, but it takes 1 or 15 minutes to travel there. Okay. I went through all the recordings yesterday.
Okay,
I couldn't able to do the pay.
that's fine. We'll do it today. So all the
I completed like 450 recordings were there.
okay, I didn't know the count. I didn't know the count. So only one more recording that I want to add to that. That is on the stamp duty part. I need to add one on the
Yeah,
stamp
it was
duty.
small introduction regarding that, right?
I will have another small video added about the stamp duty. The rest is done.
Yes, done. So I finished it with these, like, I have to repeat
Yes.
because I listen to recordings, but I have to repeat it and go through the news.
Practice the questions also.
That's why I took this borrowed this time.
That is the hard part.
That's the hard part. And the other thing is, sir, I need a favor from you.
Hmm.
I'm just trying to get a good study plan advice
Okay.
because I'm getting study leave 28 to 4th.
20 to 4. So we have around 6 days.
6 to 7 days. So it's around like my paper starts around like 1:30 at like okay. So around like within 6 days I need like good plan. Please advice.
Then
Of course, these next 2 weeks, they won't be much work still because audit is in a small company, small company.
okay.
So no worries.
So if you can finish off the theories by that time, the best advice would be try the Kaplan revision kit. Sorry, a BPP revision kit. If you have that, let me check whether I have. I'm not sure for ATX whether I have or not. And the other thing you can do is follow up on the worst case, go ahead with the Kaplan revision kit. So attempt the questions in that and the study hub. So then, of course, certain papers we will discuss in the class. Other papers also, if you can give a try, I think that is more than enough.
Yeah, and
Because
now before the exam, I will try and do some mock paper by myself also. So
I think they have released the pre-mock now. So that anyway can be attempted. But the best thing is, like I said, now it's more or less about practicing questions. Because otherwise, the thing is, we might feel that theories are fine and we are okay with that. When we start doing questions only, we will feel the real pressure.
I just went through the recordings and the days once, right? So it's F6, I can remember certain things, but if I say many times, that's like example, it doesn't pop up in my mind like, so it takes a while to remember.
Easiest thing is questions because ATX, the good thing is there's a pattern of questions. So, I mean, if you ask tax, it's very hard to predict. But ATX, it's other way around. If you do 2 to 3 papers, you will see the same kind of questions are getting repeated, unlike to the tax one. Tax, it's always something new. But ATX, we have a general set of questions. So always around those only the paper is getting revolved. So that advantage is there in ATX. So if you do 3 to 4 papers on your own, you are good to go with the paper. Even by checking the answers, if you do that, that's fine.
That's fine.
So do initially on your own timing, do it, then compare with the answer that has been given. That is more than enough because in ATX, most of the questions are similar kind. So we are getting repeated with similar kind of questions. Very unlikely ACCA, but ATX still we have that advantage. Tax is completely other way around. It's always something new. They will never repeat a question in section C in the same way. But ATX, completely opposite. That is a generic type of questions that are getting repeated. So 3 to 4 papers, you're good to go. That's why I'm always confident about ATX that it's easier than tax. Because tax one is totally unpredictable. So you have to be prepared for the unprepared.
Yeah.
Like don't even try to imagine what will be there in the exam. It's going to be something completely new.
And tax is pretty.
Very, very tricky. ATX, straightforward as well.
So easy. The tax paper structure looks easy, but it's kind of like a
Always, it's something new is there. And something to think is also there. It's not as if what it seems. ATX not like that. Questions are not that tricky. Mostly straightforward. But only thing is, we have to keep the things in our mind. That's it. If you are good at memory, ATX will be easy for you. Not a big deal because the questions will be straightforward 90% of the time. And if you do 3 or around 4 best case past papers, then you will see similar kind of questions are getting repeated. So if you know the answers for those questions, you are good to go with the exam. Not a big deal as well. So mainly focus around questions and the what do you call the sir? Questions and the past papers on your study leave. The balance period you can go ahead with whatever you want, like the theories and all.
So I just go through the views and then one experiment, start going through the views.
Yeah, you can go ahead with the tunes that we have done. That is mainly done through Study Hub. Tax we went ahead with a separate set of tunes because, like as in tax is tricky, so you can't purely trust only the Study Hub. But ATX is completely other way around. That's why I used Study Hub itself to go ahead with ATX because mainly they are copying from Study Hub for ATX. It's easy, you know. So that is why I stick to the Study Hub when it comes to ATX. Uh, until your study leave, just try to go ahead with the recordings and try to grab everything in your mind and maybe the study hub questions. And during your study leave, mainly focus on past papers and the Kaplan or BPP kit questions. BPP would be ideal, but not Kaplan is also fine.
Then we should like, as usual in every exam, the PPP is kind of like the toughest one. And the Kaplan is easy, has a lot of questions. The PPP is the like the most technical one.
BPP is tough, but like what I always used to say is deal the devil. Then anyway, you know how to tackle the angel, no? If you can survive with the devil.
Yeah.
So same thing, if you can survive in audit firm, you can obviously go and survive in the corporate world. He also like that. If you face with BPP, pretty sure exam is going to be easier than the questions that you face in BPP. Because most of BPP questions are old past paper questions. When we did, those were tough. Nowadays, with this computerized things and all, the past papers are not that tricky like we faced. So that is why BPP is tough. They are using the questions in our time. They have changed it to the current Finance Act, but the questions are more or less like the questions that we faced, which are harder and trickier. So that is why BPP is a little better than Kaplan when it comes to revision part.
Kaplan gives you a good revision, right?
Kaplan, the thing is, questions are too easy.
Too easy, it revises your knowledge, right?
And sometimes the answers are too lengthy. You don't need to write that much in the exam.
I noticed.
Kaplan, sometimes they try to grab all the possible answers without providing the guidance for the reader. What is the minimum content that you need to give? BPP other way around. Even study hub other way around. The study hub gives all the points, but they specify how much you need to write for the exam also.
But sometimes the study hub will provide the BPPs, right?
Sorry?
Study hub, if the ACCA study hub, it has to be BPP questions, right?
Some. Because both these fellows are not doing most of their questions. Most of the questions in their revision kits are taken from the previous past papers.
Okay.
So that is why you see some similarities in BPP and Study Hub. But end of the day, Study Hub is the main study material. That is the official one now. For revising wise, BPP would be ideal, if not Kaplan. Kaplan, only the issue is the answers are too lengthy and too easier. When it's too lengthy, we feel we need to write all those, but that is not the case. Because 7 marks, sometimes they have around 14 points. Who need, right? 7 means 4 to 7 points is more than enough to get 7 marks. You don't need 14 points to get 7 marks. But Kaplan tried to explain, because like you said, it's more or less like revision rather than exam guidance.
Right.
So whatever possible answers they are trying to include in their answer, which is good in a way. Then we know everything that is around the question. But we need to be mindful about how much we need to write for the exam question as well. Otherwise, we will end up writing essays or sometimes even projects, which is not required at all for the exam. Very good. Right. So let's move on to the paper that we were discussing.
And once I got it.
Sorry?
I get this weird noisy, I have to do the charge.
You can plug to this one. But make sure you don't harm the other two plug points.
Yeah, I remember.
When we are trying to be tech heavy, problems are there.
Yeah, that's right. I just start with the rather than like going to the examiners thing. I just start use the Excel sheet for my response, right? To do questions.
Better get used to the exam portal itself.
Over time.
Because certain functions in Excel is not available in the portal.
Yeah, the 1990 question of Excel, right?
Therefore, better to get used to the portal itself. Not loading. Here's one of them to check on this. It's not loading. If you change the Wi-Fi, it should work. Can see. Oh, yeah. Now it's it. Thank you. Sorry. Can you also log into the portal? Okay. Wait for the paper as well. Wait for the paper also.
I just opened the question.
Are you open the question? Right. So like we discussed last week, when you are reading the requirement, don't try to grab the entire thing at a stretch. That will be too much to remember. Go one by one. So if you just walk through the first one, write a memorandum for the large limited group client file. So that means this is for the client file. Assist us in preparing for a meeting with Rossetti. So that means the objective is to describe what needs to be done in a meeting. So that means it should not need to be very detailed in the one where you giving to the client. The summarized version, what we need to discuss is more than good enough because you know what to speak, no? So few points about the areas that we are looking at is more than good enough. So that means they are not asking to explain you in essay. Few points is enough. We're good. So always check the objective of, I mean, they might say a memo or an email or a letter. Just check what is the requirement. Requirement in the sense why they need the memo or the letter or email. So if it is to give to the client, then yes, we will have to explain a bit.
You have to step forward, right? And we did in SPL, where report in this format, right?
Here we don't ask to go for reports. Mainly it will be a letter, email, or a memorandum. So we will walk through those through the questions itself. So memo and note is the same format, just that the heading is changing. Memo we say as memorandum, notice we say as notice. Email and letter we will discuss from the next few questions as well. Okay, good. Right. So always, just because they say memo, while having that in mind, don't just start the question. Check why they need the memo. So if it is for your internal purpose, maybe for a meeting or to a fire, then few points like bullets will be enough. But if they say, sorry, this is to explain the client, then of course you need a lengthy one. Because client will be a guy who doesn't have much of tax knowledge, right? So you will have to one by one explain what are you trying to say. Example, let's say you have rollover relief. If it is for discussion purpose, you can just say rollover relief and how it is applied. But if it is for the client, you might have to explain a bit about what is rollover relief and how that is relevant for his business. Likewise, you will have to give a bit of a background to understand. It depends on why we need the document as well. In this one, for our purpose, for discussion, Obviously, few bullet points is more than good enough for our purpose because it will be for your manager, no? So that fellow should know better than you know. Once you give the points, he should be able to understand. You don't need a essay kind of a thing to give to your manager. Good? Right. In practice, that is other way around. Client is understanding better than the manager. That's a different story, isn't it?
No, it depends on the client.
Depends on the client, you know.
I've been to the client, they are not taking the much.
In my case, generally, client is more practical than the manager.
Because I've been to several audits. I've been to the worst companies.
Okay.
So worst financial practice. I didn't find a good. I never found a good company with financial practice.
That also we have a reason. The thing is, we only trust on accounting and controls, no. But from client's point of view, client looks at only one thing, operation and profit. So we need to match these two together. Where we go wrong in Sri Lankan audits is we only focus on what we know. We don't try to balance it out with what the requirement of the client. That is where we get stuck. As finance professionals also, that's where we get stuck. Because we are so much into concepts. So when I go for these lectures, these webinars and seminars, it's a common question that I always ask. So you learn a concept called cost cutting, right? Can you in reality, can you apply cost cutting in a business? You can't cut the cost. You can control the cost. So that is where we get miscarried away. Because when we see marketing, we always try to cut the marketing cost. It's not about cutting. It's about how to optimum utilize the budget that we are allocating to the marketing. That is what we should be bothered about, not the cutting part. Because zero marketing means your sales will also be zero in a while. Unless you are a very, very established brand and you don't have any competitors at all. Right? A blue ocean strategy, yes. But that is a dream world, no. That will never happen in the real world.
In my case, thing is they more than their own knowledge, they totally rely on their systems. And the systems, it's not perfect.
Always systems has their own
I
defects.
mean, I'm not talking about the internal system. I'm talking about the
Accounting systems and all they are used. That is also again the problem is whether they are using the system properly. Sometimes system might be correct, but the way they use the system or the data that they input the system might be wrong.
They haven't mapped it properly. That's the case.
It's not a fault of system. It's a fault of again the human intervention.
So, yeah.
Because I faced a client, I will not disclose the name because of professionality problems.
Yeah. I was.
So there was a client whom I faced once when I was at an audit firm. The fellow has income in trillions, so his money is going on trillions. So millions they don't care a damn about. So finally, we came across a situation where depreciation. And they had the best software. I will not name the software also, but they had the best software at that time. Software in the sense it's a ERP, not an accounting system even. It's a good, solid ERP, global, well recognized, one of the leading ERPs at that time. Still, it is one of the leading. So they were using that. But still, their deficiency in depreciation compared to the accounting standard was close to 1 billion. That is after using ERP. Yeah? So when I drilled down, ERP was correct. But the thing is, these ERPs are prepared for worldwide, right? So it will not only have IFRS system. Okay. So it will have whatever the recognized accounting practices in the globe. So you have to select what is the practice that you are going to use. So the depreciation method they have ticked as the default depreciation method was something out of the IFRS. But it is something adapted in European countries.
Yeah, can be.
So that is what happened. But as a result, the depreciation was deviating in billions compared to the IFRS.
Some people they use the gap, right?
But the ERP was correct.
Yeah, yes.
Just that we have inputted wrong data. So that's how it works. So finally, I was able to find billions. So moving on to this one, when you carry out this work, you should note that the large limited group claims all possible tax deductions and deferrals in respect of both tangible and intangible assets as soon as possible. So that means whatever the relief that they can get, they are going to do it as and when they are capable of doing that. So then we are moving on to the requirements. Requirement number 1 is about sale of STV. That means they might be selling a company called STV. You should ignore the value-added tax when carrying out this task. So keep in mind, task is task number 1. For task number 1, ignore value-added tax. Not for the whole question. No? Only for task 1, ignore that. So first one is, so there might be 2 options on how to sell it. So explain the corporation tax implication on the option 1. Second one, on option 2, explain the corporation tax and stamp duty land tax implications on the sale of building. So there might be a sale of a building. And calculate the taxable profit resulting from the sale of S trademark. So
Intangible asset. Intangible asset.
intangible assets. So I can recall we went through the scenario roughly. So we had 2 trademarks, if I'm not mistaken, in this question. So the story is clear.
Yeah.
We are not going to read the rest. First, we are going to construct the answer for these 10 marks. So they said the details are on exhibit 1. So I'm opening exhibit 1. On exhibit 1, they have given the group structure. Okay, there is no way that I can change the size on the tab. Sorry about that.
Fine. Even I tried it too.
In your one, you can just drag and drop. Go to the corner. You will see a small arrow to drag.
So
You can increase to a certain level. Not the full screen, but better than my one.
Okay.
To a certain level, you can shape up the size. So LARC has 4 subsidiaries according to this situation. One is STV, that is resident in UK. The other one is 10, again resident in UK. So that is only 60%. So 60%, as and when I say 60%, one alarm should tick your mind.
60% is it's called. Oh,
It cannot come under the, what do you call, group relief group. It can be a part of constoria.
okay.
But that also we need more details. Just because I have 60%, I can't go for actually no. Go for that also, no one should hold more than 50%.
Yes.
So you're holding 50% means constoria is also out. This is not a group relief group one. This is not a part of constoria as well. So tax implications for 10, I don't think they will ask in this particular question. Since it is not coming either. We are good? Right. Then we have URB co. It is tax resident, but read carefully, not in UK. It is tax resident in a country called Lahiru. We are good? So can that be a part of group? But you can't do any transfers because it's not a UK resident. You good? Then VAR again resident in UK. So we don't have any problem with VAR also. So I'm pretty sure the question will be revolving around STV and VAR. Yeah, okay? All 5 companies are trading companies which prepare accounts for 31st March. So that is again a good thing for us. So discrepancies in accounting period will not be there because all are in the same accounting period. URB co trades in the country of Lahiru and is resident there for tax purposes. There is no double tax treaty between UK and Lahiru. Okay, we have a problem. In case if we have any transaction between the LAC Limited and Lahiru, now you can't use most of the double taxation principles. You will have to go for the default double taxation methods. Yeah, okay. All the other four companies are tax resident in UK and pays UK corporation tax. You're okay with that? STV Limited background. LAC Limited acquired the whole ordinary share capital of STV Limited on 1st May 2018 for £550,000. STV Limited trades from the Strict building. So there's a building called Strict building, which is purchased from an unconnected person on 1st October 2019 for £430,000. The Strict building is not eligible for structures and buildings allowances. On 1st April 2022, STV Limited purchased a registered trademark. This is S trademark, the one that they are planning to sell, for £30,000. You should also aware that on 1st May 2023, VAR Limited purchased a registered trademark. This is V trademark for £40,000. So what does that refers to? Why do they giving another V trademark also? So one company has purchased a trademark called S. Another company within the group has purchased another trademark called V. Any reason that we can think about? Anything, any adjustment that is possible? How about group rollover relief? So we are selling STV, right? So that means trademark S will also be sold. So when trademark S is sold, we have V trademark, which is purchased during the year, against which we can claim the rollover relief, group rollover relief. So maybe that is why we have data about V trademark. Correct? While reading, grab this stuff in your mind. We okay? Whenever you see a information, think why that data being provided. What kind of adjustment might be there? We are good? Right. Both trademarks were acquired from unconnected persons for use within the respective company's trade. They are being written off over a 20-year period in the company's financial statements. Total amortization in respect of S trademark is £3,000. STV Limited is a profitable company, has no trading losses or capital losses brought forward as at 1st April 2023. Sale of STV. A sale of either STV Limited shares or assets are the options that they are looking at. Option 1. Under this option, LAC Limited would sell whole of the ordinary share capital of STV Limited to an unconnected company for £920,000. I'm pretty sure they might ask us to compare this option 1 and 2. Second option, under this option, STV Limited would sell its assets and would cease trading. It would then pay a dividend to LAC Limited equal to the post-tax proceeds realized. Following transactions would occur. So possible transactions. Stock building would be sold to VAR Limited, another intercompany though, at a value of £700,000. VAR Limited would use the building for trading purposes. S trademark will be sold to unconnected company.
Is it like PADR or tax? PADR is it like
PAT?
PADR?
VAT, BADR. Within the group, right? So do we need to have release taking? Will there be a chargeable gain? within the group. So no chargeable gain or loss, right? Whenever you sell only, you will have the problem. Okay. Other assets, equipment and inventory would be sold to various unconnected companies for market value. This would result in additional taxable profit of £20,000. Receivables would be collected and trade and other payables would be paid. In total, the sale or realization of these other assets would result in a net cash surplus of £130,000. That is what we need to answer for the requirement number 1. I'm going back to the requirement. So this is the requirement number 1 for 10 marks. So let's split this also into 2 categories. First one, let's say for 3 marks in respect of option 1. Can you draft a small answer, the points? What we need to write for option 1? Can you try to draft the points? We can spend around 6 minutes for that, since it's 3 marks.
Okay. It's going like a memo, right?
Format, I will come to that. For the time being, try to understand the points that we need to discuss.
In the state of share and closing out the entire business.
Yeah, so our concern is right now option 1, sale of shares. What kind of a corporation tax impact would be there from that?
So, chargeable.
You have to think and write. Once you write, we will start a discussion. Because I need to check how you would write the sentences. You're getting charged. I can hear the sound is
Yeah,
coming.
it's like there's small loose connection. I don't know from where.
Now it's okay, I think.
Yeah, I think it's from you.
From the port.
Yeah, from the book. Getting the point here.
Okay, so nothing came into your mind or came few things but not sure.
A few things.
Okay.
Okay, so we are talking about corporate tax implications, but it has a lot of sale of shares and profit.
So again, we are talking about a company, no? So let's say you have a chargeable gain. That is also end of the day impacting what?
Companies from
Thus, you are impacting your corporation tax only. Because for the company perspective, we don't have a separate CGT. Agree.
yeah.
So whatever the gain or loss that you are talking about under the corporation tax story or sale of share story, that is going to impact ultimately your corporation tax only. Okay?
So the chargeable gain.
Because your TTP will include chargeable gain also, unlikely for individuals, isn't it?
Yeah. So basically what I understand here is
Mhm.
this is a sale of share capital.
Hmm.
Sale of share capital means has been in proportion with the market value over the formula.
Mhm.
So that's what probably here. Yeah, it's about the sale of share income regarding it's not about not disposing the company. It's about like selling the shares, so share capital gain,
Mhm.
chargeable gain. So it will be included. So in addition to taxable profit, the chargeable gain will be added.
Mhm.
And then impacts the operating tax.
Correct. But one more point you are missing, that is SSC, substantial shareholding exemption. We had something like that. So that means if you held for more than 10% of the shares and you're selling the whole thing, you can claim for the SSC. So if you claim for SSC, yes, chargeable gain is there, but that will be exempted, isn't it? So only 2 bullet points you need to write. Let's see the format then. So this is how they have drawn down the format. So memo, generally what you need to do is say it's a memo like memorandum. Then we need to say for whom this is, either client name, then what is the subject and prepared by whom. Generally you can put as a tax scene, it's a normal thing. Then the date. After that, have one line on what we are trying to speak here. Then most important thing is each exam question, if it is covering more than one, have a proper breakdown of what question are you referring to here. They have done that, right? Sale of STV Limited is one. Under that, you have a sub question that is for option one. What is the implication? So they have properly breakdown. That we need to give with the question a number. That's what they have done here, right? Yeah. So they have given this is question number one. Under that, they are saying this is option number one. We're good? Right. Then, so what they are trying to say is, yes, there is a corporation tax impact through CGT, CG, but this is coming under SSC. And then they just say why it is coming under SSC. First one, it's a trading company, obvious. Second one, like I said, you held more than 10% prior to the sale. If so, the criteria are met. So SSC is applicable. Though there is a chargeable gain, that is going to be exempted. So corporation tax implication would be 0. We're good? Again, since this is an internal one, this bullet is more than enough. Like I said, we don't need like in the answer. But if this goes to the client, you will have to explain a little bit on both of these bullet points.
Can you explain it like remind me a bit about the SSC?
SSC is this is a option or rather exemption given for the corporates. So if you are not just corporates, actually about business assets. So if you are disposing shares, two criteria are there. One, it should be a trading company. Second one, prior to the sales, within the last 6 years, at least for 1 year, you should have held more than 10% of the shareholding. If these two criteria are met, the gain will be exempted from corporation tax. You good?
What's the reason?
The reason is always what we are trying to do is we want to encourage share transactions, right? So if you are setting up with a higher volume, then it is going to impact the market in a high level. And if I just come and impose another tax, the volatility will be controlled because you might not go for the higher kind of trades. And we are encouraging people to do manipulations then. If I go to sell, what will I say? Okay, open an account for your wife. If you have kids, open a couple of accounts for them as well. I will split the whole transaction and split it among you guys. Then get it transferred to you. Rather than doing a generous transaction, now I will try to do tax evasion. Isn't it? So prevent that. We are saying, okay, fine. If the criteria are met, if it is a genuine transaction, fine, go ahead. We give you the exemption. Because when you are selling, I can catch you, right? I don't mind as HMRC whether I am capturing the seller or the buyer. So buyer, when you are selling, I will catch you. No problem for me. Isn't it? We are good? Clear? Whole story is good? So again, since this is something that you are writing to your manager for his use, we don't need a safe here. Couple of points like this is more than enough. Okay? Right. Then let's move on to option 2. Can you give a try for that one as well? Don't hurry, properly structure the bullet points. It's not good for the laptop actually.
Yeah, that's why I'm thinking it's kind of new here. Having it here today, I don't think you should get that. I think it's because of the length.
Are you sure it's the boat?
Yeah, I think it's a boat most probably. Because I changed the car.
Yeah, but I can see you try this one.
Yeah, it's flat. Yeah. Okay. So, yeah. Okay. Try that. Yeah, that's quite. Because it's not good for the laptop and it's too close to the exam, leaving the laptop. At this stage, we should not take any risk with that. Yeah, that's the thing. Be using it until I finish my there's only and I'm using this for my audit firm. They don't provide a laptop, right? You can take it. No. Even has a lot of staff facilities. And even when I was an assistant manager, still I get problem laptop, so not a problem. But at least you all had a laptop there? Yeah, it doesn't have a battery. A laptop, but it doesn't have battery. But I was supposed to travel all across the country because I was doing that thing. So I used it for only one day. The returnist can use my laptop. I mean, without the battery, you cannot go and discuss with the branch managers, right? Yeah, that's true. And foreigners, I should be marriage also. Your reputation is done in that case. That case. So I want the after that I return that and use my own laptop.
Then
Spot and I just figured out, I note it out properly.
try to finish off properly. Okay, so tell me the points that you wrote.
So it's for trading purpose.
Mm-hmm.
That's one thing.
Okay.
So for trading purpose, like selling, yes, it. To another company for trading, there's an exception, right?
Mm-hmm.
And the other thing is sale of intangible assets as a role.
Mm-hmm.
And the other thing is, that sale of shares totally exempted. And
But now it's not sale of shares.
Here,
Here you are selling the assets only.
selling the asset. So when selling the asset, the chargeable gain is rising.
Mm-hmm.
Uh, and the other thing is the other assets. I don't know why they have been treated. And there's an additional taxable profit of 20,000, say for those things that other assets. And there's a cash surplus 100,000. Why there's a cash surplus?
Cash surplus in the sense by selling the other assets and after setting off against the liabilities, they are getting additional cash amount of 130,000 pounds. It is a cash amount, not the profit. Profit is 20,000 additional taxable profit.
So
We are okay? So this question, we don't need that 130,000 story. Here we are asking about only the tax implication. No?
yeah.
So the tax implication is based on the, what do you call, profit, not on the cash received. Yeah, okay. If you take one by one for corporation tax purpose, here also, you are selling to a company within the group again, right? STV is selling to VAR, isn't it? Sorry, again within the group. So then within the group, will there be a chargeable gain? So no chargeable gain again, isn't it? Exactly. So we are selling on no gain, no loss basis. On the other hand, stamp duty, same story.
Stamp duty.
That's fine. We'll keep it aside for the time being then. Once I upload the next recording, maybe hopefully tomorrow, you should be fine with stamp duty also. Then trademark, of course, we'll have to do a small calculation because we are not reinvesting the full amount. If I recall properly, the sales proceeds was 50,000, but the investment for the new trademark is only 40,000, if I recall properly. Numbers are correct, right?
Yeah.
If so, we have to think about the partial disposal concept or partial reinvestment concept. Clear? For that, we will have to show a small calculation with the numbers. Okay?
Yeah.
Right. Let's see how they are going to demonstrate that in the memorandum. So both of them are members of the company, like I said, 75%. So buildings and all will be transferred on no gain, no loss basis. So the building purpose, there will not be any additional tax coming into the picture. Stamp duty, same thing. We don't charge again because it is within the group. Then for the trademark, yes, of course, we can claim the group ROR, but it's a partial reinvestment. Or like I said, 50,000 is the amount received. This amount, but we are reinvesting only 40,000. So the partial reinvestment story comes into the picture. For that, first of all, we need to figure out how much is the gain. So 50,000 is the sales proceeds. 30,000 is the original cost. Amortization, which we have done up to now, I take out of fund. Then only 27,000 we can deduct.
Why this?
Because we are thinking that the value will come down in the straight line basis, right?
Yeah.
So the cost we can consider only for the remaining lifetime. Agree?
Isn't it included in the cost?
Included, but total cost we can't allow you to deduct, isn't it? Because for few years you have already used. Agree? So let's say you have incurred 200,000, I mean, hypothetical, let's say 200,000, you are using 20 years. And you have used 5 years now. Now what will happen? This will be 10,000 into 5, right? 50,000 you have already used. Then this 50,000 we should take out of this cost, isn't it?
Okay, you mean the.
Only the remaining cost we need to consider because the balance part we have already utilized, isn't it? Agree?
Yeah.
So I took out the 3,000. Then my deductible cost is only 27,000 pounds. As a result, I have a gain of 23,000. But since I have only a partial reinvestment, now I am going back to the calculation. So disposal proceeds 50,000, reinvestment is 40,000. So the lower is the 10,000 unreinvested amount, right? We compare the actual gain against the unreinvested amount. So actual gain is 23,000, whereas the unreinvested amount is only 10,000. So 10,000 I am deducting. So this 10,000 you can claim the what you call the ROR. The balance will be a profit. Agree? This is ROR.
The lower of the chargeable, lower of the gain. And the and the reinvestor, okay.
Okay. That's the impact that we need to discuss because that's all they're asking, right? They are not asking for the other assets or whatever here. If you check the requirement properly, they are asking on the building and the trademark only. Correct? So nothing to worry about the other stuff therefore. Simply, this is what all you have to write. This tutorial note is just for your understanding. You don't need to bother about that in the exam. We're good. So to get 10 marks, this is all you need to write. Less than half a page.
Yeah, but it takes time to think and process it.
That is the only difficult part in ATX.
That's why I just said.
To figure out the exact points and just to put them properly into the structure. That's all you need to do. But in tax, you have to do a lot of calculations. You have to go through a lot of tricky things. Here, completely other way around.
That's why it's like kind of this where it's done like where and where.
So don't think big stuff here. Just stick to the basics. That will easily get you through the ATX. If you try to think more and more, you are putting yourself into trouble. Because this one we are talking about basics. You good? Right. Then we'll move on to the next one. Now, part 2. In order to assist society in deciding on which option to proceed with, prepare calculations to show which option would generate the greater amount of post-tax proceeds for Lark Limited. In respect of both options, okay.
So they simply take we need to simply show the first option, there is no tax application, right?
Yeah.
So we can simply show the proceeds in there.
Correct.
And the second one, we need to show the intangible assets.
Plus, now the other assets and all are also coming into the picture. Correct?
Yeah.
So forget about part 2. Can you try part 1? How to present?
Then Excel would be.
No, do it.
How do
Excel, you can do the numbers.
Yeah.
Numbers you can do in the Excel.
So that's also my concern. So how do we like?
You can give a small exhibit or something. Like, let's say, go on to this.
No, that calculations happen in there. That's all.
So,
How do we put that calculation in Excel?
you have two options. One, copy and paste from Excel to this one. Or two, explain what you are trying to say in couple of bullets and say exhibit 1 or whatever. And in Excel, name it properly as exhibit 1 or annex 1 or whatever. Give a reference.
That's my concern. So will examiner will look into it.
If you properly give the references for the workings, yes. That's why they give you both Word document and the spreadsheet. No? Otherwise, no point of giving those two. No? Sorry. Either you can copy paste, but easiest thing is give the bullet points, and for the calculations, give a small working reference like annexure 1 or exhibit 1 or whatever. Very good. That will be easy, like what you do in a research report.
So here again goes for the first question. Again, it's like as previously mentioned about these exceptions are applied. If the exception is SSA exemption is applied. So there is no chargeable. There is no implication of the chargeable corporate tax. So therefore the proceeds is much.
Yeah. Second option, you need to do the calculation as well.
For second option, I have to show the calculation.
Correct.
Like I can connect the previous question, give the reference and do it.
Can do, but it will not, except for the trademark, the rest will not have an impact.
Yeah. So for the rest, I have to do the questions.
Correct.
Sorry, the calculations.
Trademark, the final number you took that we are impacting, the number we got as impacted, that you can bring forward. Yep, it's in pounds. Don't convert.
Yeah. 830,000. Okay. So what I did is I just copied and pasted the ordinary share capital of SDB Limited on first week 2018 is 500,000. In option one, if Clark sold the sold whole ordinary share capital of SDB Limited to an uncomfortable for 920,000. The net proceeds of sale of share is 307,000.
First option.
Yeah.
Okay, all right.
So, as discussed before, the corporation limited does not have does not have corporate tax.
SSC is there, okay.
It's
SSC.
Yes, it's so therefore, no chargeable gain of profits. So no corporate tax.
So you need to give the post-tax proceeds as well. How much is post-tax proceeds?
So there's no the same 300
No. Whole 920,000. Cash flow, right? We are talking about not the profit terms.
Yeah, but there's 500,000 share capital, right?
Yeah, that is the original investment. But now let's say you are selling this laptop. If I ask the profit from you, then the sales price minus the cost. If I ask the cash proceeds, then it's the sales price minus whatever only the expenses that you incurred, isn't it? So in this case, no expenses are there. So the full proceeds that you received is going to be your post-tax proceeds. Correct? Right. Try for option 2 as well. Option 1 is clear now, right?
Yeah.
Actually, you can do one more thing for option 1. You don't need to write that whole thing. You can say, as SSC comes into the picture, there is no additional corporation tax liability arise as a result of this. And second point, you can say, as a result, full proceeds, that is 920,000, will be the post-tax proceeds in option 1.
Yeah, the requirement is post-tax proceeds, right?
So those 2 points is more than enough for the marks for that.
So, this is a question we have.
Hmm.
We are deducting the tax from the proceeds right now, from the cost, right?
From the proceeds, yes.
So 13,000 minus. Yeah, 13 for the intangible assets, 13,000 tax.
13,000 taxable.
Yeah, taxable. And mention that taxable. Yeah, it's taxable gain. It's taxable, so. Yeah, it's like this chargeable gain, trading, taxable gain, plus that 20,000. Plus that 20,000. So 13,000 plus 20,000. 50,000 plus 20,000. And the 13,000 in total sale of real estate. Yeah. 50,000, 20,000 and 13,000. 70, 83, plus 130,000.
Okay.
So that would be the, this is the net cash surplus. Okay, now I understand is that would be the post-tax proceeds for option. Total of.
Because this 13,000 is a taxable amount, right? Not a proceed. So 13,000 into the tax rate would be the cash outflow for you as additional tax. So what is the tax rate?
Tax rate is around.
Corporation tax. What's the rate?
Corporation tax. It's 9%.
We have two rates, 19% and 25%. So based on the given numbers, obviously your profit is going to be above 250,000, the higher rate, right? Upper limit. So you can use 25% rate. So 13,000 plus 20,000, those are taxable gains. Those two into 25,000 is the tax outflow. The balance are inflows, right? So get those inflows minus this outflow. Agree? That's what we don't need to do for option 2. If I check what they have done, 700,000 is coming as the buildings proceeds. 50,000 is coming for a trademark. 130,000 is coming as cash inflow for the other assets.
So the
Total proceeds is 880,000. The only outflow we can see is these two, right? A trademark and other assets. These two are the only outflows that we can see. So both will be limited to the tax rate, not the full amount is going to be an outflow.
Yeah.
So 13,000 into 20% and 25% and 20,000 into 25%. So this is the amount we are going to deduct. This is going to be my tax one. And again, this is also not going to liable for any corporation tax as building is a intercompany transfer. So that is also going to be 0. As a result, same thing is going to be the post-tax proceeds. Then if you compare these two, this option seems to be better, right? That's all we need to do.
It's very simple. But
So where you get carried away is you're not separating properly between the cash and profit. So when it comes to this whole accounting,
so when we are advised, why are we going with the, of course, they are asking with the post-tax proceeds. But why are we going with the proceeds?
think yourself as a taxpayer.
As a taxpayer, we have cash. Is that way?
So let's think you're the taxpayer. I'm the advisor. You want from me is the best tax effective method or the method that gives you the highest cash flow even after setting off the tax.
Yes.
Highest cash flow, right? So that's what we are advising you.
But sometimes the allocation can be profit as well.
Yeah, again, even if you go for profit, same story here, right? Profit is also high in this one because you don't have any cost at all. Plus, when we say profit, don't think the traditional accounting profit. That is for us. If I do a business, now I want to sell this. Cash, how much I can get is my concern. Because the cost of this is sunk cost for me.
Yeah.
I have already incurred that. Now I can't change it. So profit is not my main motive. How much I can get for this is my motive. My net cash flow, isn't it?
Yeah.
Because from a businessman's point of view, whatever the cost you have done, that is sunk cost. It's already incurred. You can't change that. How much I can get in return would be my concern. Correct?
Yeah.
That is where we get lost. That is the difference between skills level and professional level. Skills level, we are sticking into the accounting concepts. Now, in professional level, we are trying to align that with the real business world scenarios. So, a businessman will always look at how much he can get. Reducing tax is also why it comes into the picture to maximize the amount that he saves in his hand. Correct?
Yeah, that's right.
So, where we get lost is as accountant, we seek for the most profitable thing. Sometimes that does not give me any cash flow at all,
Yeah.
isn't it? But if I don't have cash, how am I going to pay the salaries for next month? I might have done the most profitable transaction in the world. But if I don't get enough cash in hand, I can't run the next month's business. Isn't it?
Yeah, so that's the thing. So it's well profit and account. Yeah, it varies, but like there's more taxable profit means it's not good for the taxpayer as well, right?
So always we are sticking to the cash flow because from a businessman's point of view, in a layman person's point of view, that is what important, right? So this is the difference between an accountant and a finance professional. Always. When I was a student also, I had this conflict. Like, I used to give a more prominence to the cash flow statement compared to the P&L. Whereas most of my classmates were focusing on the P&L. So end of the day, here I am. The rest you know. The thing is, cash flow statement is the most important statement in the real world.
Yeah, in some accounts, they used to have cash flow first forecast, right?
Plus, certain companies, like in my place, I prepare accounts on cash basis
Cash basis.
because that makes sense for me. Yes, I know accrual concept is correct, matching concept is correct, all are good. But end of the day, if I have profit but I don't have cash, that doesn't make any business sense for me, isn't it?
But depends actually, right? Sometimes it's short term.
That is my mind. I need to control my mind. That's a different story.
Yeah, so sometimes like in future we can like we need to make decision, we need the tax profits are available, right?
I'll give you a solid example. Assume you have 1 billion in your hand. What are you going to do?
Yeah. My
Buy a land and a house. Expected. I won't. Yes, half of that I might. Maybe 25% or 40% of that I might to go for a smaller part. Rest, I will invest in a diversified portfolio of liquid investments. Why? You think house is an investment, try to sell it. Now you see what I'm trying to say.
it's very like it's going to sell it.
Let's say you sold it, where are you going to stay? Selling means you have to spend that cost again, even if you sell at a profit. At least 75% of that you will have to spend again for a new residence. Whereas me, the full amount I reinvested, giving me a return on annual basis, plus whenever I want, I can encash them. Just because I encash, I don't have any cash outflow as well. It's purely my decision. That's the difference. That's the difference between business and we think ourselves as business, isn't it?
Yeah.
Long-term profit is good, but is it realizable profit? That is what we need to think.
Like cannot like the short term we need to like that's it.
It's all about long-term investments are not bad. We have good long-term investments. I'm not saying it's bad. Land is good option. I'm not saying bad. But have to think about how well you can realize that. Agree? Land is different, house is different. Land might be a good option. House is not.
Yeah. Residential.
Because even if you sell at a profit, you need another place to stay.
And land, because since land, it's like, it's not recurring, right? The income,
So why we lose is even in the share market, if I take a diagram like this, you purchase at here, let's say the price is going up. You should sell at some point, right? But we don't. We wait till it goes to the top and suddenly it collapses, right?
bull bear.
So we forget that. Even after being accountants, even after being people who are doing the forecast, we forget that. We look for this maximum point, which is very hard to figure. But if you sell it around here, still you have a high profit. But you are looking for max profit, which will never happen.
Yeah, it's like somewhere close to the maximum. But it should not be declined, but
Yeah.
increase.
So that is where we need to be mindful about. Some smart fellows are there, they sell at this point, gain the profit. They know at some point this is going to rise again. No? Around here, they repurchase. Some point it will get like right.
But see, this is kind of like a gambling, right? Not gambling, it's a pattern thinking.
Kind of a pattern.
Pattern thinking, but it's like there is there's a risk, but it's like unpredictable. We are not predicting the certain events. Sometimes it's
I say you don't need to predict. Just take this word out of your mind and invest only the amount that you can hold on long term. You have 100,000, go and invest 100,000, you are done. You have 100,000, go and invest 25,000, you are good to go. We do two mistakes when we are going for this high risk, high return investments. One, we invest everything we have. Then one mistake, you are done with everything. That is the biggest mistake we do. Two, we are too greedy. Even I did that mistake once. Luckily, a small amount. So I'm still holding on to that because I stick to the first principle. I didn't invest my entire thing there. I'm still holding. There will be a day, someday it will go up. No. Until then, I'll be holding. I'm not selling it. But because of first principle is okay, I invested a very tiny amount. Therefore, I'm safe. If not, the profit maximization or the too greediness might have something. So if you eliminate these two factors, this is a good thing to invest. That's where we go wrong in land and buildings as well. We want to maximize the profits.
just it becomes tricky.
That will never happen because the buyer will also do his research, right? He will also try to go for the lowest price. Agree? So liquidity is one of the main things, or realizability. I'm not saying actually liquidity, realizability. The realizability is a factor you need to think. So that's why we are thinking about the cash looking, which is more reliable compared to unforeseen future gain, which we don't know whether it will happen or not. Agree? Now we are clear about the difference between the profit and the cash and why we focus on the cash mainly on the business. Clear?
Yeah.
Sure. And this understanding, we need to answer these questions. We're good. Right. Now let's move to the second part. In respect of both options, set out any other tax or commercial matters directly relate to this proposed sale, which we should draw society's attention. Try to think about what are the other factors we need to think here. Now try to think out of the box, sir. Try to think out of the box.
So they are talking about the other tax implication means, it's not only, is it relating to corporation tax? Okay.
Corporation tax also you can, if there is anything that we did not discuss up to now.
Yeah, so in here it's not only about the,
Even the business aspects you can speak about. Try to think.
say, any other tax or in commercial matters.
One easy idea is focus on other type of taxes.
So in just one, right, they are talking about finance director or someone, right?
Okay.
Regarding the income tax, the dividend income implication. I think.
Can discuss. But how to draw that properly?
So that's right. So this is not the only the company, right? If I'm not mistaken,
Any other tax or commercial matter is fine. I'll give you a hint. One hint is VAT. We didn't discuss the VAT impact. You don't need to give that in detail because next requirement is that. So what you need to get Rossity's attention is, sorry, VAT is also there, which we didn't discuss yet.
set out inheritance implications.
Sorry,
Set out is we need to.
set out in the sense just bullet points. What are the other areas? Like I said, VAT. Value-added tax implications need to be checked.
And the employment. That's that one.
Try to think. We need to get used to think.
So other commercial matters related to tax. So
Other commercial matters can be any kind of a business matter.
so is it about like selling one particular, it's like disposing entirely of the second option, the trading option, trading collapse. Okay, so there's no profit or loss. So the gain arising is it feasible for the group? Is it beneficial for the group?
I'll give you a different point for that. This you had 700,000 for the building, no? Do you have actual cash inflow there as a group? You are transferring from one entity to another within the group, isn't it?
Yeah.
So group wise, technically in option 2, the actual cash flow is very less, isn't it?
And the other thing, is it's like VAR and STR is coming into one, right? The group structure coming into one, and the VAR's assets and liabilities, right? It's an increase in availability of the company. So the corporate tax in the future, the taxation in the future, the liability has to be with 3, right? Rather than 4.
But that's a good point.
So
Not bad.
So liability has to be with 3. And the other thing is they don't use any. And the other thing is the margin of the tax.
I don't think, because either way, the profit seems to be very high,
Yeah, about 25%.
Try to think. 2, I already told you.
One is fat.
Yes. The other one is net cash flow situation in option number 1. Option number 2, sorry.
So in option 1, selling of when they sell entire shares, they are selling it to another company. So
Yeah.
it's like selling a part of it to another company or keeping it Like
Are fully selling it or fully keeping it.
fully keeping. So it's like a restructure.
Either way, it's a restructuring. Either option you choose.
Yeah, so in option one, it's like we're just keeping it. There's no overall impact.
Yeah, option one.
Yeah, rather than tax.
But no, yeah, the cash inflow, so you are getting no. It's outside, no. 920,000 or something, fully you are getting the cash, right? Whereas option two, within the group, most of the things, only the 130,000 and 50,000. So 180,000 only are receiving.
Yeah, so that
The rest is circulating within the group.
So there's no, as you said earlier, the tax, the taxpayers impatience for the cash, right?
Correct.
So option one would be a good approach in that case. If he's like,
Again, requirement is not about which option is better now. That was a previous requirement. Now the requirement is outline what could be other things that we need to draw Rossetti's attention when she is making the final decision.
so one is one.
Two main things we discuss. One is VAT. Second one, in option two, technically 700,000 we are not receiving as a group. So it's a transfer from one company to another within the group itself. So we are not getting anything technically. Agree? The only amount we are getting would be that 180,000 from outside. From that also the tax impact we have to take out.
Yeah.
Clear? Let's see what they are going to do. So this is what they are going to say. First one, now the building will be owned by STV, right? Because you sold the shares, not the asset. Building is with you now. And building is STV means now VAR is not getting a building. They wanted a building, right? So now they will have to think about purchasing the building outside. So that might have another cost for them. So it's another business angle that she needs to focus. These are the main implications on option one, because there will be no VAT implication as well. I'll come to that in the next requirement. Next on option two, like I said, technically as proceeds, you are not getting anything actually. Less than 180,000 you are getting. Apart from that, there are certain tax disadvantages as well. Why? Because you are doing intergroup transaction, right? Intergroup means the original cost to the company STV, right? Yeah. The original cost to STV on the building will be the cost to VAR also now. Agree?
Yeah.
Which was only 430,000. So someday when VAR sells this building, they will end up with paying a higher tax. Isn't it? That option, that implication is also coming.
So it's for option one, right?
Option two. Because option two, there was a building, no? Strict building. Oops, sorry. You had the strict building. This was owned by STV. Correct? Now what you are going to do is you are going to transfer this to VAR in option two. So if you do that, it's an intergroup transfer. So no gain, no loss. The cost for these fellows was 430,000, right? If so, the cost for VAR is also going to be 430,000. Whereas the current market value is at 700,000. But now we need to simply disregard this entire 700,000. But this is going to be your cost.
That's good on here.
That's bad for VAR. Because when they sell, this is going to be the cost that they can deduct, right?
Yeah.
Whereas if they went outside, this whole cost they could have deducted. Now, when you sell, the corporation tax you need to pay will be a higher amount. Agree? Right. Okay.
This now I noticed. Oh, stock charge, that's why it's on there. That's the reason.
It has removed. No shit.
Yeah, okay, 25% drop. Battery is fast.
Okay. Now how much is the battery?
32%.
Hopefully it gets charged soon. So are we okay with this particular one as well?
Yeah.
Again, not hard. Just that we need to understand properly.
Understand and apply it.
But very basic concepts we are talking about, not in-depth or hard concepts that we are talking. No hard and fast calculations, no in-depth calculations, straightforward answers.
Just take pop-ups.
So how many marks by now? 7, 17. Yeah. So far we answered for 17. Whole 17 was straightforward. No in-depth or heavy calculations were involved. So that means, as I always say, ATX is easy. Just that we should know to trigger the right point. And we didn't write any essays as well, right? For this entire 17, we would have spent around, if I wrote in an A4, maximum 1.5 page, max for 17 marks. Mostly, if it was me, 1 page. Because I don't write essays. I hate that. In my case, I always write in bullet points. So around 1 page would be if it was me. Very clear? So no need of huge essays, no need of healthy, huge bulk answers, no need of going to very depth. Surface level only we are touching, but we should understand the implications properly. Very good. Right. Let's move on to the next question as well. You should note that Rossetti intends to include all eligible companies in the group VAT registration, and that the UK resident companies in the group make standard rated supplies only. However, Rossetti will need to resolve certain administrative issues before application can be finalized, such that the group registration will not be in place until 1st May 2024. Explain which of the companies in Lark Limited Group would be included within a VAT registration with Lark Limited. Can we give a try for that one? We'll do step by step. Group structure was given.
So tax resident in URD comes into picture, right?
Tax resident in Lahiru.
URD, yeah.
Yeah, it will not be coming under here. True. Carefully evaluate and write down.
Yeah, I think I was about to ask, don't we get the tax rules page? Tax rules page,
Tax rates page. Just click here.
tax table.
Yeah, and click this.
It's in here.
At the left corner.
So all the exit URP, right? Lahiru, right?
Only except legal. Yeah. What about one company we had 60%, right?
Yeah.
Can we include that as well? I'm not saying yes or no, I'm just asking.
Yes.
Okay. Yeah. Yeah, we can.
Can, right?
Yeah. So how are you going to write that?
So we
Try to write.
first of all, we need to talk about the Lahiru.
Try to write the bullet points. Again, keep in mind this is a part of the memo.
We want before.
Yeah.
All training activities. For your is operating outside the UK. Therefore, before is not registered for
I would say not
as a developer, not
as
as
a
a
part of the group, let's say, with Lab Limited.
is not considered as part of
That group for Lab Limited.
that group for the law. Yeah, it's the rest of now is about the rest of. Um,
Right? Assuming you are writing the exam answer.
You are the 2 points. Your depot is considered company destined to all trading activities for URVs operating outside the UK. Therefore, URV is not considered as part of that group for Latin. ST Limited, K Limited, and PR Limited are companies of VAT registered group of Law Limited since they are resident in UK and yeah, and same tax rules are applied as Law Limited.
As you had mentioned about the ownership percentage.
Yeah.
Apart from that, it's good. Let's see what they have to say. So companies which could be included in the VAT group, those which are within controlled by Lark Limited, that means they are owning more than 50. That's why I asked you to include the ownership percentage and established in UK. Accordingly, they have not mentioned the other one, what you call the Lahiru one. The rest they have said can be included in the group. So same answer you have given in a different way, but your answer is, I would say, more complete compared to the answer given in the marking scheme. Only thing, like I said, you need to include the percentage, ownership percentage, that it is above 50%, so that we demonstrate to the examiner that we know, look here, we know 50% plus ownership should be there. We know that criteria. That we need to demonstrate to the examiner. We're good. Apart from that, your answer is good. Okay? Right. Let's move on to the next question. On the assumption that the sale of STV is carried out in accordance with option 2, that is, you are selling asset by asset. Explain why the sale of business asset would not qualify to transfer of a going concern, and consequently whether or not STV would be required to charge VAT on the sale of the strict building for VAR.
The dates, it's,
Sure.
you consider the dates as well.
We can say immediately, let's assume. Can you try?
The transfer concern is it like the big product taking in accounting perspective or
Again, now forget accounting. Now two things, tax plus business.
the transfer of going concern? It's
It's not the accounting going concern that we are talking about. We had a VAT related going concern concept. There were few criteria that we need to meet. If those criteria are met, we consider that transfer as a going concern transfer.
so when they sell really the entire trading purpose of Limited is not for operating. But the shares should remain, right? Okay. The shares remain. So is that the assumption of share?
No, we are talking about VAT. No,
Yeah.
there was some VAT implication.
So when there's no questions. Just a transfer.
Group wise, yes. But If I take STV individually, we have a percentage. If you group by zero, because of one company to another company, they need to go. But even though it's there's an individual proceeds, it's not for the business, right? It's the entire trading purpose is stopped. Entire the trading, the business is stopped. Yes, business is fair. But the new business is taking this as a noise. So VAR is taking cash for business purpose. It's cash payment. So for cash payment, with the VAR, you can claim for it. That is what the question is. Try to think a little bit more deeper about that. I can just tell the answer, but I want to mold your mind where you come to a certain situation, you can think about these kind of things.
So is it because of the intergroup transaction we can't charge the VAT? There's nothing like that in web, right?
Something like that is also there.
Intergroup transaction.
Hmm.
So intergroup transaction comes like around like 50% more. I'm just confused with everything.
Right. I think that you haven't studied it properly. No, right? I felt from the answers. So one thing is, one question here is, now you are not selling as a what you call going concern. No. If you sell a business as going concern, there is no VAT. But that is not the case here.
What's that as a going concern?
That means you are selling the business shares. Someone will continue the business in the same nature, and the next person will also be immediately registered for that. If these stuff are met, then of course we can consider that you are a going concern situation. But in this case, it's different, right? It's not the full business. Business will cease, only an asset will transfer. So going concern story is not applicable. That is the answer for the first part. They are asking whether the going concern is applicable or not. That's the answer for the first part. Second part is what will be the VAT implication? So if it is not a going concern, VAT will come. But we had a bill for buildings, VAT will be charged only if it is a new building. But this is an old building, right? They have purchased in 2019. I think so. The question said earlier, I think it's 2019.
Yeah.
19 or something in the. What
Yeah,
is-
I saw that in 2018 and they sold it for 2019, October, yeah, I'm connecting. Which is purchased from unconnected person now? 2019.
So 2019 means more than 3 years. So this is not a new building now. It's an old building. If so, VAT implication will not come unless you had an option to opt in. So you opt in and waive off the exemption, then yes, again it might be taxable. Opt in the sense now technically you are exempted no, because 3 years are over. But you have the option to opt in. But if that is the case, you have to charge the VAT from the output VAT side. Then you can claim the input VAT as well. But on the other hand, whatever the operations you do in the building will also be liable for output VAT. That is the opt-in option. We are good. This is all we need to say. So this is what they are saying. It will not comply for the going concern one, as no single purchaser will be acquiring the operations of the business. It's only the asset.
Only this.
That part we discuss. So they might have to charge VAT, but VAR will not be I mean STV and VAR are not VAT group members, right? At the moment, because you have not taken the registration now. And the registration will not happen until May.
Yeah.
So if you do the transaction now, as of now, you are not a part of that group members. So group consent will not come into the picture now. unless you delay the transfer up until May. Agree? Right. And STV will anyway not come under the whole story, right? As a group, isn't it? STV.
STV is under.
Yeah, it will come, but the thing is, right now you are not in the web group. You have not done the registration so far, so you are not in the group. So group exemption is not applicable. Like I said, if you have opted in, yes, you have to charge. If you haven't opted in, no VAT implication would be there. That's all you need to say. 3 points, and you get all the marks.
So basically, what's the, what are you charging? STV will require charge right now?
On the sales
Or
process.
only on sales, right? But not from the purchase side.
Purchase side and sales.
No, import. Website, there's no import website.
No, right? You are only selling. No, we are asking for STV side only. No?
STV side.
Yeah. Only 3 points altogether you need to write.
That's why. It's confused why the transfer of going concern. That's there. Why is this concern? That's what I.
Again, now let's say I run a business and I sell the whole business to you. You continue the same business, same VAT implications are there, and you also registered. Then, as HMRC, do they have a problem? No, right? Whatever they could have get from me, now they are getting from you. So why do they charge me again for the sale? It's not logical. But if I shut down the business and sell the assets to you, then they can't catch you separately, right? Because you will be using the asset in some other way, isn't it? Then they have to catch me, take the VAT from me.
Yeah.
Agree?
Okay, now. Point.
Story is clear? All are good? Again, we were touching the basic, right? We didn't go to the depth, but you got 7 marks. This is why I say ATX is service. We are not going to the depth.
It's just mostly around the application, right?
How to apply it in a real world scenario. It's 100% practical. We are good?
Yeah.
Clear? Right. Let's go for iCloud storage is full. Okay. We'll go ahead with the, oh, sorry. Next requirement as well. Reducing the corporation tax payable by the group of companies. Now you have to read the exhibit 2. Explain the corporation tax implications for large limited group of adopting the pricing strategy suggested by Rossetti. Can you give a try? Let me check with them about this iCloud storage problem. There's a message. You go ahead. I'll check with them on their end.
Problem, sir. I mean, the thing with recording.
They're talking about the intensity tool, but they say is, the other comes for URP. Their corporate asset, corporation tax is low, so they are trying to purchase it from there to reduce the corporate tax.
But we have to keep in mind that there's no double tax rate between these two countries.
Yeah.
So
The single company transaction, no way, no loss.
it is within the group.
Within the group, right? So. So I think that's the answer. We are seeing the corporate tax implication rate. So in here, limited by some of the what it uses from URL. So it is an intercompany transaction. So as a result, the intercompany transaction, when they don't have an intercompany transaction, when they are part of purchasing it, it's not. So URB, they're selling it, so it's a non-gain non-class. The corporation tax is wrong here. Because large limited purchasing in from no label doesn't impact corporation tax. Because the thing is tax when they are purchases are can be a tax deductible, right? So in this case, yeah, it's a pricing strategy.
Can I also read the pricing strategy? I didn't read that part.
Yeah, so
Okay. Okay, I went through that.
so in this case, I'm understanding. So They ask, you want to be selling to the last four,
Mhm.
the price charged for third party.
Mhm.
So in this case, so, so
Give me 1 minute. Give a try. Give me 1 minute.
yeah, that's my concern. They are saying increasing the price.
Okay.
You are seeing
No, no, I got surprised exactly when I opened the door. You started. Yep.
so they are saying increasing the price of intercompany transaction doesn't make sense. It seems.
Doesn't make sense.
Reducing that will help to reduce corporation tax. Because anyhow the vice components you are so there's no gain out of similar.
Okay.
Okay, so even though they are increasing the price or decrease the prices, there's no impact. Because it has to be with the dealing with the company they price.
But again, for tax purpose, we can create an impact. Accounting wise, yes, intercompany transaction. But tax wise, this fellow is not a permanent, they don't have permanent establishment in UK. They are a non-resident, right?
Yeah.
Then it'll be outside party for us for tax purpose. Isn't it? Counting different, tax different. Got the point?
Yeah, but for that's, I got that's only applicable for VAT.
They're not asking for that perspective, right? They are looking at the corporation tax perspective. They're okay.
Yeah.
But yes, some points you said is correct. So this is what they are saying. But they are not intercompany for tax purpose. They are not within a group relief group concept by say, but you are connected, right? You are connected, transfer pricing will come into the picture. So we are having the same control, even though we are in two different countries. So transfer pricing is applicable. When the transfer pricing comes, doesn't matter at which price you price, for tax purpose, we consider the arm's length price, the actual arm's length price. Agree? So under transfer pricing, law could obtain a tax advantage if it were to pay more to purchase by an unconnected party. But this is a connected party. Therefore, we will go for the arm's length transaction. So you are not going to get any benefit here. The exemption within the transfer pricing rule for small and medium-sized enterprises will not be available because these are larger companies and you are directly connected. As a result, you don't have a double tax treaty also. So anyway, this strategy will not give you any benefit.
Because the pricing is not.
We are going to go for the transfer price. But let's say current generic price of them also lower than the normal market price. Then yes, up to the normal market price, they can increase the value. Isn't it? Let's say, I mean, different pricing strategies could be there. No? So let's say currently they are charging £100 per component. This is their general price. But let's say on the market, generic price is 120, even though anyway, let's say this company is pricing low. They are a low pricing company. Average market price is this one. Then yes, up to this one, you can increase your price because this is the average market price. You are if you are anyway a low pricing company, that can happen, right?
Yeah, but they have already initiated that one.
Yeah, true. But I'm telling about a scenario. This can happen. If so, we can't say no, nothing can be done. Something can be done. You can bring up until the average market price of 120 in our exam. We're good. This is all you need to write. How many marks are we getting? 4 marks easily, right? As I always say,
It's very four, four,
4 points. Yeah,
and expecting to like.
can do. As far as, I mean, even 1 point is fine. As far as all the required analysis is there. You're good. Short, small points will be better rather than trying to do descriptive 1 point.
I think it's professional skill marks in here.
Yeah.
So 4 marks means one mark should be.
Can be, sometimes might not be.
So the professional skills, analysis, interpretation. So it's.
So that's why I said more than one in the answer. Few bullet points will be ideal. Because this is for discussion purpose, right? So assume in practical sense, your manager goes and sees huge para. Now he has to read the entire para prior to him explaining to the client, right? If it is bullet points, he can just look at the bullet point and explain. It will be easy for him. It can be like this and this, isn't it?
Yes, that's
These are the important things. So try to drill it down to the points rather than having a one lengthy answer. Okay, good. Right, let's do one more part. This is again an interesting one about GARR, GAAR, sorry,
good.
GA, General Anti-Abuse Rule. I have reviewed this strategy and concluded that it would fall within the GA. Distinguish between tax evasion and tax avoidance and state the purpose of GA. Explain why GA would apply to the strategy suggested by Rossetti's business advisor.
One is theory, second one is practical.
This one more or less like theory. Can you give a try?
That's it. Yeah, I've done the first part. Okay. Second part. So first part, I do tax evasion is that the taxpayer evading the tax payable which is liable to HMRC. Tax evasion is legal and crime offense in UK and in countries. Tax avoidance is that the taxpayer finds loopholes and plans to reduce the tax payable to HMRC. Tax avoidance is not legal and efficient method when planning to business.
Don't say trying to find the loopholes. Try to say using the provisions within the legal framework, trying to reduce the overall tax liability.
Yeah.
Don't say loopholes. You might lose marks for that. Don't use the word do first. Rather than, let's say, within the legal framework, trying to reduce the overall tax liability. That will be more professional in terms. Can you try the other part as well? I mean, restaurants, you will say what is GAP? Yeah. Restaurant had three components.
Yeah.
Evasion, avoidance, and what is GAP? Can we check?
Yeah.
So simply, evasion and avoidance they have given, like evasion, like you said, it is unlawful. We are trying to play around with the law. Avoidance is, on the other hand, we are trying to use legal methods within the legal framework. We are trying to reduce the overall tax liability. GA is a rule that is coming to control your taking undue advantage of these tax planning activities. So we are trying to have a double reasonable test here. Okay? Right. So how the GA will apply on the given plan for Rossetti's business? So obviously, if they do this is not avoidance. This is not evasion as well, isn't it? So if you check the double reasonableness from both sides of the companies, you are just trying to pump the money out for another company which is having a lower tax rate. So in a way, it's tax planning, but if you continue to do that for each transaction, then that becomes a misuse of the tax avoidance.
It's outside another company.
It's outside the country, no?
It's not to be here, right?
Still, same story you are trying to do, right? So that will be seen as anti-abusing. So GA might come into the picture. That's all what we need to say. Simple as that. Not a lengthy answer again. Couple of bullet points, and we are scoring how much?
Is there a skepticism part?
Partially yes, for the second part. Not fully on skepticism, but yes, second part of GA part might be seen as skepticism also. We're good. Right. So we'll stop at this point for today. Go through the balance requirements. Try to write for this question. We have only one part remaining, part B. Give a try and we'll try to write it. Then we'll discuss next week and move on to another paper on the next week. I mean, the balance questions first, if the time permits, to another paper. And try to come on time.
It's sure. Next time.
You can come half an hour early.
Uh, yeah, I was supposed to come. But yeah.
Let's see. I thought you were coming, I was about to leave. Then only Dashra came running and said, so he's here.
Yeah, if this like if I'm like 10 late, just tell if it's better if someone drop in message. I can confirm something happening.
Or else if you ask me, just come a message to me.
Sure.
And I know I will wait.
Okay. Okay.